You're listening to the Simply Flawsome Show, a podcast designed for you to listen, learn, and leverage. Please welcome your host, Zoe Turner.
So on today's podcast, we're going to be talking about a subject that not a lot of people like to talk about. And quite frankly, the person who I'm going to be talking to today, if you were to meet him at not to meet him personally at a networking event, but you know what he actually does for a living, a lot of people would actually run a while. However,
I don't take it personally.
However, putting insurance in place in the event of your death, especially if you've got family and you've got children, is a really serious concern. And I've been asking James to come onto the podcast for quite some time now, and I planned to speak to him last month. Obviously, the month of October is Breast Cancer Awareness Month, and I thought it would have been a really good time for us to discuss it then. But we were both really quite busy with other projects, so we've only really just got the opportunity to sit down now. But like I say, life insurance is a subject that not a lot of people know a lot about. And there's so many questions that people are very embarrassed to ask. So I'm hoping that we're not going to bore you to tears today, because it's not the most exciting of subjects. However, the questions that I do think we're going to go over for you today are going to be questions that would be very useful to you if you were to be sat in front of a life insurance expert, and that would help you plan for your family's future. So without further ado, let's welcome James Marks to the podcast today. James Marks is a senior associate. He's been a financial advisor for many, many years. He's an ex-colleague of mine from a company that I worked at for 5 years. And he's probably one of the few people that I would trust in this industry, hence why I asked him to come along to the podcast today. So welcome to the podcast, James.
Thank you for that. Let's see if we can tackle some of these interesting questions about life insurance today.
Okay. What's the most common question you get asked, James?
The most common question is most probably, am I not covered through work? That tends to be the biggest misconception. Well, it's not actually a misconception, to be fair. A lot of people are covered through work, and some work policies are very good. The only issue with them generally is that when you leave your place of work, you no longer have the life insurance. It leaves with you. And what a lot of people don't consider is that the percentage of people that actually die during work is actually relatively low. It's probably a good thing, but it is relatively low. So what normally happens is people get ill, then unfortunately the work has to let them go, and because they've let them go, they lose the life insurance, and then if they subsequently die, they then don't have the protection in place for their family.
So quite often having work life insurance isn't actually as good as it sounds.
It's not. I mean, it's always, I would look at it as a bonus almost. If like most, not all, but like most expats, you move around companies and you move around countries, if you can get something in place that follows you wherever you go, and that's adequate to look after your family, God forbid if something happens, then you're fully covered no matter what. If your company offers something, and that might change from company to company, then okay, you can't have too much life insurance, in my opinion, but you can always have not enough, and that generally is the case, unfortunately, with most people.
Yeah, thank you for that. And I do think that's a really important point to discuss. And I know when I was sitting in front of a lot of individuals, that was the first thing quite a lot of them would say. In the industry, in sales, you would call it an objection.
Yes.
I've already got life insurance through my employer, but the reality is, and it isn't just a sales tactic, when financial advisors are sat down in front of you and they say, well, yeah, that's all good and well, but, it's good to have your own in place as well. That's not actually, for the reasons you've just stated. Yeah. A lot of insurance companies and a lot of employers, if payouts are made, that comes at a cost to the company, and that also comes at a cost to the other employees because their premiums go up. So quite often, not saying that this is going to be the case with a lot of companies, but they're going to avoid paying insurance out if they can.
Yeah, I mean, a lot of the policies, and you know, some companies do have very, very strong policies, I will say, but a lot of companies just tick a box. Now, if I'm sat with a client and they're adamant that they've got, and this happens quite a lot, I've definitely got enough through work, and then it's always worth, and it's worth doing this regardless anyway, to actually work through the figures. You know, look at the two main reasons for life insurance, in my opinion, is long-term debt and dependence. So if you work through the individual figures that are relevant to your situation, and then you work out exactly how much you would need in the event of death, and then look at what have I actually got through work? Because quite often it's 10 times your basic. Now, as we know here in this region, a lot of the time your basic is a lot less than your take-home, but people get that confused. So if you're earning, let's just make up some figures here, if you're earning 40,000 take-home, but your basic's actually only 20 when you take out housing allowance and school fees and everything else, that's a massive difference. That's like half the amount. And if you've calculated your life insurance on the higher amount, then your family's going to be left short. Again, some clients will look at it and they'll go, well, I will include my work life insurance as part of my overall life insurance. As long as they have something that's consistent, I wouldn't say it's necessarily a bad thing, but they just need to make sure that they reassess that every time they change jobs.
I guess there's lots of ways of approaching it and calculating it. I mean, I used to say as a general rule, and this is really quite general, that you know, if you times your annual income, you said by 10, I used to say that by 20. I mean, that was a good, and that would be a good level of life insurance. You know, obviously, I would ask them to times it by the number of years they've got left to retire. Yeah, so that means that individual would have enough income, would have the same level of income, their family would, you know, have the same level of income that they've currently got in the event that anything happened to any of them. However, I would always point out that's actually a really, really good level of cover, and not all people need that. Any insurance is better than no insurance.
Sorry to interrupt. I totally agree. Look, I think it's very much an individual thing. What you don't want to have is you don't want to have too much insurance and pay too much money, because hopefully, if you're taking a term assurance to, say, a retirement age as an example, you need that money up to retirement if you were to die before, to make sure that your family's looked after or that your long-term debt's paid off. So if you have too much, then you're paying too high a premium. But everyone is different. You know, if you've got young children, there's a lot of moving parts in this. Do you want to make sure there's enough money there to cover their university fees? Do you have a house back home for your wife and children, in this example, to move back into? Is that a consideration? Maybe don't look at what you earn, but look at what they would need. Because if they're going back home and living costs are half the price, why would you base it on here? Because then you're going to be paying twice the amount. Most, not all, everyone's different, but most people will move home when something like this happens. So if you base it on what's affordable here, but what you would physically need in the different scenarios, and this is another reason why I think it's important to have both the couples involved in the conversation, because they will have different opinions. And obviously you want to get the amount right without it being too much, but at the same time making sure it's adequate.
Yeah, definitely. It's definitely worth sitting down, like you say, with both couples. I remember in the past when I used to sit down with the men, and then I would sit down with the man and the wife together, their face, when you're going over the financials. And I don't know if it's an ego thing with men, but quite often they would just say that they were earning a hell of a lot more than they were.
Yeah. Whereas
women just tend to be so much more kind of honest and realistic about it.
Absolutely. And the other thing is that they both have different objections and different ideas of what they want. So if you get the agreement between two of them, then you make sure it's fully bulletproof.
Okay. Out of the people that you sit down with, generally, what would you say the average age was?
I'd probably say mid to late 30s.
Because age is a big factor when it comes to life insurance, obviously, because the the younger you are, the less statistically you're deemed to be at risk. So the insurance is going to be a lot cheaper. And if you're taking term insurance, then that premium is going to stick with you until the end of the term, which is, if you take that until your retirement, you're stuck with that. Well, you're not stuck is probably not the correct terminology to use, because you've benefited from that low premium up until your retirement. But the reality is, a lot of people tend to take insurance out in their later years. Would you say late 30s, early 40s?
I would actually say generally later. I think, like a lot of things in life, you tend to do things either through greed or fear. So on the life insurance side of things, most clients actually come to me, which is quite rare, and say, I want life insurance. It's normally because someone they know has just died, whether that be parents or a friend or a colleague. It's a reaction to something. It's very rare that someone comes to me and says, look, I'm thinking about my family's future, their protection, I want life insurance. It's normally a reaction to something else that's happened. But I would say most people that I meet outside of work, let's say, when it's not a meeting, and inside work when I am meeting them, most clients under 40 that I meet tend only to have their work cover, and it's relatively rare for them to have their own individual cover. Some do. I'd probably say maybe 20-25% do, but the vast majority do not, and in most cases haven't thought about it or haven't wanted to think about it.
Yeah, you're totally right with what you're saying about it being a reaction. And I don't know whether or not we'd be able to change people's opinions with this podcast, but it's definitely worth planning well in advance for these scenarios. And I'm guilty of being kind of reactive about a lot of events in life, and I think it's human nature that you react to situations like that, because I think we all think that we're never ever going to die.
Yeah, I agree. I think the other reason that a lot of people take life insurance is once they have children as well, because all of a sudden they're not just having to look after themselves. They've now got a small little cute human that is totally their responsibility, and if something happens to them, it's obviously going to have a massive knock-on effect on their life, obviously emotionally but financially as well. So that is sometimes a reason why people might come forward and say they think they need it. But I think to sit down at any age, and like you said earlier, the younger you do it, the cheaper it will be. But things will obviously change through life. But as I say, if you take it younger, we can always amend things as life goes on. A term insurance plan is relatively stagnant in terms of being able to make changes to it, but there are other plans that are a little bit more flexible. So if you are on, let's say, the younger side and maybe pre-having family, and then maybe it's worth taking a plan that's a little bit more flexible so as we can change it in the future. But again, it's a case of sitting down and looking at all of the aspects. I mean, today we're mainly focusing on life insurance, but I do believe something that's very close to that is critical illness insurance as well. So I think looking at all aspects.
No, we need to talk about critical as well in this podcast. Life, and to me, I put that all under the same umbrella. Life and critical.
Yeah, I mean, from my point, I think they're both important. But I actually believe that critical illness cover is probably relevant to pretty much everyone, because at some point you're either going to die or you're going to get a critical illness, but normally, unless you're unlucky in an accident or something, generally you get a critical illness first. So then you might have a year and a half, 2 years of not being able to work and being ill before you die. So again, it's planning for that side of things. Statistically, a lot of people get ill relatively young, surprisingly. I mean, I think in the region, these figures are not exact. Mm-hmm. I think things like strokes in this region, the average age is like mid-40s, which is really very young. I mean, I always remember when I was younger thinking of something like a stroke for old people 65 plus. But actually, because the environment we live in here, and we all work hard, and obviously it's related to stress and everything else. So it's again sitting down and looking at, if I was to get a critical illness, how would that affect me, and how would it affect my family? And again, there's a different way to look at this. I would normally look at it and say, look, let's look at, and this is age dependent, but let's look at someone that's in their 40s. I would look at what they're earning, and then look at what they're spending, and I would actually base that cover more on what they're spending rather than what they're earning. And I would normally say to them the ideal amount of cover is 36 months or 3 years worth of critical illness cover. This is obviously separate to the life cover. The reason for that, in my opinion, is that 12 to 18 months is normally the time it takes to either hopefully fully recover, which is what you want, or generally after that time, then the person tends to pass away. So with that in mind, it's 12 to 18 months of not having any financial stress. If you've not got financial stress, in my opinion, you're much more likely to get better, because if your stress levels are lower, then you're more likely to get better. Then you've got another 12 to 18 months to maybe restudy because your old job was stressful, maybe relocate. But again, you can do all these things, or even looking for another job. If you've got money in the bank, you're not going to be stressed. You're not going to go to that new interview when you're recovered needing the money. You're going to go there relaxed. And if you're going there relaxed, then that obviously will make that transition easier for you as well.
Yeah, thank you. I totally agree with you that stress causes a lot of illnesses. And I do believe that a lot of illnesses are psychosomatic, in that they're created in the mind.
Yeah.
So if you are diagnosed with something, and like I say, you've got all these worries and this anxiety about how you're going to pay the bills, how you're going to pay for your child's schooling, how you're going to put food on the table, it's not the best environment, for trying to get better, because you need to be as stress-free as possible.
Absolutely. And again, a lot of people I speak to, again, it's age dependent. I mean, like, I'm 41, I'm a smoker, although I'm constantly giving up, but I am a smoker, so for my insurance I probably pay about 40% more because I'm a smoker. That actually makes sense because I'm more at risk. So the fact that I have insurance as a smoker, I'm probably more likely to get lung cancer or this type of thing. But I pay more for that. If someone's a non-smoker, obviously they pay less. So quite often I'll have meetings with people and I ask them the question, do you smoke? They say no. So I ask them the question again, do you smoke? They say sometimes. You ask them the question again, they go, well, only shisha at the weekend. That doesn't count. And again, this brings up the point of needing to kind of be honest. Some people say, well, what if I have to have a medical examination? Well, for me, having a medical examination is part of it. If God forbid they find something at medical examination, it's better to know, but generally they're not going to find anything, but it will give you that peace of mind at that point.
But most people in this region would need to have an examination. I think if the premium is above 250,000 or 350k with some companies, am I correct?
Yeah,
a medical examination is always needed.
It's age dependent and previous health history dependent, and also cover dependent as well. So different companies have different kind of limits, if you like, for when you need a medical, based on age, based on limit, based on whether it's critical illness or life insurance. So, but it will always say, or it should always say on the quotation that you get, whether you will need a medical. Now, if you disclose something in the health and lifestyle questionnaire, which you have to fill out as part of the application, then that might change. But if it's assuming on the quotation that you're fully healthy. So it'll always tell you up front if you're going to need it or you're not going to need it. I wouldn't see it as a worry, although a lot of people do go, well, I don't really want a medical. Firstly, it's a free medical. You're not having to pay for it. The insurance company's paying for it because it's in their interest to understand what your health situation is. And in my mind, it's in your interest to understand what your health situation is before it goes in place.
Yeah. I probably shouldn't really be saying this, because I certainly don't want to be encouraging people to lie when they, do their application forms. But I'll never forget this when my brother once said to me, my brother used to live in Abu Dhabi. He'd never smoked in his life, but he was a drinker. So he'd literally, he hated smoking, but he loved to drink, which basically meant that he'd been around smokers pretty much his whole life, because whenever he wasn't working, he lived in the bar, yeah?
Yeah.
And when he went for his medical, the doctor said to him, "How long have you been smoking, Mr. Turner?"
Wow, really?
Yeah. And he was like, "I've never smoked a day in my life." He was actually quite offended because he hates smoking. And that always used to get me thinking, passive smoking within itself can be very dangerous. And how can these companies actually tell that maybe you can go into this in more detail than me. How can they actually tell that you are a smoker?
The rule of thumb on any insurance application, just to cover this off, you have to be fully transparent and fully truthful. Because at the end of the day, there's no point in not being, because you're putting this in place to protect yourself or your family or both. So if you've put something on there that isn't 100% correct,
and
then
if
that's
were found out,
exactly,
you
and
wouldn't
you
get
would
a
be found
payout.
out, and then the insurance company won't pay out. So then there's no point in paying the premiums anyway.
It's wasted money.
Absolutely wasted money. And when it comes to smoking or non-smoking, and I've had similar things with clients that have given up 6 months, 9 months before, they do a coatine test, I think is the right terminology for it, and that determines whether you're a smoker or non-smoker. So if you become a non-smoker, i.e. you have no nicotine intake for more than 12 months, you can go for one of these tests and change from a smoker to a non-smoker. Albeit on a term assurance plan, you would have to restart the plan from that point. But again, it's being honest. Now, in your brother's situation, he was being honest, but because he has had passive smoking, it's obviously in his system, so they would have to change that for him being a smoker. Now, again, maybe in 12 months' time, if he maybe sits in the non-smoking section of the bar, that could change, and then it would revert back. But he'd done nothing wrong because he was being honest.
Okay. What about, medical's always a contentious issue as well, because, you've got the sensitivity of weight.
Yeah, I mean...
to deal with, and obviously if you're overweight, that's going to have an impact on your premium.
It certainly can do in extreme cases. I mean, one of the questions most of the health and lifestyle questionnaires ask is, have you dropped, I think it's normally 5 kilograms in the last few months? So they kind of cover that off in a way, because they don't want someone fasting to the extreme of losing weight, because that can also be unhealthy as well, or it can be a sign of potentially something being wrong with you. I think you need to go for it as you are. I mean, if you're worried about being overweight, smoking too much, drinking too much, being out of shape, maybe worried about having diabetes or something like that, if you're worried about it, that's probably more of a reason to take the insurance. So it is what it is. You can always try and change it afterwards. But what if you wait 6 months and God forbid something happens in that 6 months? Surely you're better to go as you are and find out as you are, and you can always improve things in the future, health-wise.
Yeah, so it's about just being kind of really honest. Because a healthy BMI, obviously it does qualify you for, the lower premium. But as you just said, there are questions on that form that basically ask you if you've had any rapid weight loss in the last few years. So you can't have someone really overweight just going on like this kind of crash diet, or going to a detox centre, losing a few kg, or having kind of one of those gastric bands fitted or whatever, and having an operation to get rid of all the fat, and then not disclosing that Because there's questions on the form that...
Again, if they'd done that, then they wouldn't be 100% honest, which could then affect their actual insurance at a later time. I've also had examples where clients have filled out all of the application, presuming that they're very healthy, and then they've done the medical, and then they've found something on the medical. Thankfully, in these instances, nothing bad, but something that actually does increase the premium. So always a little bit of an awkward conversation when you're having to go back to a client and say, look, your premium's not going to be X, it's now going to be Y because they've found this. The reaction of most clients is, oh, well, I don't want to pay the extra. But in reality, they're an insurance company. They've increased it because they see you as a risk. If they see you as a risk, that means that your chances, unfortunately, of needing the insurance are higher. So you should absolutely take it in that scenario. Again, maybe it's highlighted something that you can go and do something about at a later date, but I think, again, it's a good thing. If you know something, you can do something about it.
Yeah, definitely. Let's get back to smoking. So you were just saying that your insurance is 40% more, quite simply because you're a smoker.
Yes.
I actually thought it was around the 30% mark.
It kind of varies on gender, so female and male, the premiums are actually different depending on age, because obviously at different stages of life there's different things that can go wrong. And it's the same when it comes to smoking as well. I think the older you are, they don't actually differentiate between if you smoke 1 a day or 20 a day. They just look at simply yes or no. And then, it depends on age and a few other factors as well.
Okay. But of course, quitting would help. However, it's still complicated. Like if you kind of quit and then a month later you apply for life insurance, you're still actually classed as a smoker. Because isn't it 12 months
Absolutely,
after a pass before you're classed as a non-smoker?
Yeah, you have to be 12 months fully non-smoker. That includes all nicotine replacements. That definitely includes shisha, although some people believe it doesn't, but it definitely does. Anything that's smoking related. Again, it's one of them things. I do constantly give up, and unfortunately, I always seem to start again. I have gone the 12 months before, but I didn't change my insurance because I didn't feel confident in myself that I might not be out and slip and have a cigarette. I would rather make sure that I'm covered than save a few pennies. So I think, yes, it's an incentive to give up, but I would suggest, if you're fully confident after 12 months, change it. And again, if you do change it and 6 months later you slip back, you need to be honest and go back to the insurance company and tell them, and punish yourself by paying more and by smoking again, which is bad.
Okay. We love a good story on this podcast. So do you know have you got any kind of personal stories of people that you've worked with, of situations where maybe individuals were diagnosed and they didn't, or individuals were diagnosed and they did? Have you been in the position where you've been able to present a family a check? And if so, how did that feel?
Unfortunately, yes, I have. I won't go into specific details just because I haven't asked the person's permission.
Sure.
But in this scenario, I remember I got a call on a Friday. I answered the phone, and this chap said to me that he wanted to meet the next day. Fine, no problem. I kind of figured from the phone call that everything wasn't honky-dory. Sat down with him and his wife, and obviously he told me the scenario. Firstly, it's not nice to sit there, but obviously you need to remain obviously calm, collective, and you need to go through the procedure of what they need to go through. In this instance, his first words to me was, "I wished I'd increased the amount of cover that I had." He probably had the minimal amount for his situation. But it's like anything else. Unless you need something, you don't feel you always want it. So with him, that was basically the first thing he said. I wish I'd kind of listened and increased the amount of cover that I had. However, thankfully he did have it, and it has made a huge difference to his situation, for sure.
Assuming, reading in between the lines, he was diagnosed, or someone within that family was diagnosed with a critical illness.
Yes, it was a critical illness, yes. Yeah. yeah, and thankfully is still with us today.
Okay, fantastic. So anything we haven't covered, James? Is there any other questions that you get asked that you think would be useful for the listeners to know about?
Yeah, I think there's there's two main types of insurance that you can take. There's the term assurance, which simply, just to explain, is a little bit like car insurance in a way. As long as you pay the premiums, you're insured. If you stop paying the premiums, you're no longer insured. It has no monetary value unless there's a claim made, and obviously it's still in place. In that scenario, the clue's in the title, term assurance. So you decide on a number of years that you want to be covered by. That is certainly the cheapest way of insuring yourself, and a lot would argue the best way of insuring yourself. Now, the slight downside to that one, if you like, is it's not movable. And in terms of, you can't increase and decrease the cover, you can't extend or shorten the length of time that you've got insurance for. Actually, you can shorten it, you can stop paying the premiums. But it has no monetary value. Now, the objection I get from a lot of clients is that they don't want to waste money on insurance if nothing ever happens to them. So some people feel better doing what's called a whole of life plan, which are certainly a lot more expensive, and they're also linked to an investment element, which you have to be very careful with, because you need to make sure that whoever you're talking to on that doesn't put in very high return figures, because that can then affect the insurance value. So I'm not saying it's good or bad either side, it's what suits the individual, but I would say just be cautious. If anyone puts down a high growth rate, then question it.
So what would you class as a high growth rate?
Anything above 6%. I think realistically you need to be between 4 and an absolute maximum of 6%. But at least nowadays most of them show a 0% as well. The 0% would show with no growth. So that gives you kind of a complete look at the good and the bad, if you like. But certainly anything above 6%, alarm bells will be ringing for sure, because that's very hard to achieve.
And there are a lot of advisors within this region, because I've sat down with individuals, I've sat with other advisors before, and they've shown me their whole of life illustrations, and they've been really happy because the premium's been quite low. But the reason the premium is low is quite simply because the return on investment has been quoted as being like 10-12%, which in a whole of life plan is so unrealistic. Like you say, it needs to be around about 5%, 4-5%, 6% maximum. And that's probably the most, being realistic that these plans are actually going to perform. So if anyone does quote a whole of life plan and they put 10-12%, I would personally run a mile, because I don't think they're being honest. And if they do set that plan up, they're literally setting the client up to fail, because that essentially means that their premiums are going to double.
Yeah, for sure. They're in the future, if so, just to explain, if they've put in, let's say, 8 or 10% growth, and the fund only performs at 4 or 5%, then there's not enough growth to basically keep the figures going as it shows on the illustration, which means at some point in the future you will have a choice. Either you lower the cover, you increase the monthly premiums, or you make a one-off lump sum payment into it. Now, again, if I would suggest, if anyone has an investment plan as such, how many of them are constantly growing at more than 8% a year? I would suggest not that many consistently, and I'm talking over a 7 to 10 year period. It's very difficult to do that, and I think you need to be especially cautious on the insurance, because if you put that too high, yes, it brings the premium down, so it makes the client feel good today. But in reality, if you do a quote for someone and it's too expensive for them, that's fine. You can always reduce the figures down. It's better to have something rather than nothing. But also, it's important to get the balance between what's affordable and what's not, because you don't want someone paying all of their spare money to an insurance plan that they may hopefully not need, but it gives them the peace of mind for the future. It has to be in line with their budget as much as anything else. So sometimes, it's a case of having something as opposed to nothing as well.
What I'd like to talk about now is clients actually, and they probably don't do this consciously because they genuinely feel that they're going to get lower premiums, but I experienced this a lot and still do, is that they just play you off, or they compare your quotes, the same quote for the same company with another advisor. And for me that's just a complete and utter time waste, because I know that being in the industry, the quotes come out exactly the same. Is that right?
Yeah, absolutely. It doesn't matter which broker is running the quote. If it's a like-for-like product, and then the only variable on a term assurance would be the term and the amount of cover, and on a whole of life the same, but also the growth figure, so the amount the investment's actually going to make. It's a lot of clients do it, and in a way I understand if they've never met the person before. I understand they want to search the market. I get why they do that. You would certainly do that with car insurance. You would go to 3 or 4
everyone has
different
the right to
companies.
shop around.
Absolutely, but I think if it's explained to them, and you can then say to them, look, you've got that quote. Okay, let me run the same quote and give it to you. There you go. It's exactly the same. The reason I didn't do that, and then to be able to explain, and you don't always, and I get what you're saying, you don't always get the opportunity to do this, I understand that, but if you do, and then show them, yes, I can do 8 or 10% on the whole of life, and it's exactly the same. However, you now ask that advisor to show you a fund or a handful of funds that have done that over the period of time that you're taking that plan for, and if they can, I'd be amazed.
No, I totally agree. So if you're sitting down with advisors, guys, and you're getting the same quotes for the same company from different people, you are actually just wasting your time, and you're wasting the advisor's time as well. And you're just kind of like stringing them along, really, because if it's with the same company, it doesn't matter what broker it comes from, the price is actually going to be the same. Everyone gets these special offers, don't they? They're all, kind of, they're not exclusive to any particular company.
Absolutely not. The special offers are generally all the same, and some of them have been running for a long time, and I think they'll continue to run for a long time. I get it's there to close people, but don't let someone close you on a special offer. If it's there this month, it's likely to be there next month. The important thing is to feel comfortable with the amount of cover that you've got is right for you, and also that the premium, regardless whether it's term or whole of life, is affordable for you, which should be part of the whole conversation anyway. But it's you being comfortable. If there's anything that you're not comfortable about, then I would suggest, wait, get a second opinion potentially.
You're totally right. These special offers do tend to be more of a sales tactic than anything. However, when it comes to life insurance, because it is a product that I've always felt very passionate about.
Agreed.
And I've never had any qualms about recommending it to anybody, because we all need life insurance, and if we need to use it, we're going to be really, really thankful for that. So it's important not to put it off, because it's very likely that if you do put it off, then that's when you're going to need it the most.
Absolutely. The other thing to consider as well, if you put it off for a year, potentially that's probably cost you between 6 to 8% more in the premiums. Generally, you get older, the price gets more, so it's better to fix in a price now rather than next year, because it will certainly cost you more.
Okay. Next question is there a tax involved? Now, this is something that I used to get asked a lot. What do you advise your clients when they ask you that question?
Okay, it's a very difficult question to answer, because in the region that we're in, which is one of the things I love about it, I deal with so many different nationalities. So it can be nationality dependent based on where they're domiciled. However, I would suggest most countries will tax you on any sort of money that's left behind, whether it be life insurance, inheritance. There generally will be a tax. There are normally things you can do to mitigate that. Tax is something that obviously can't be avoided, but there are some things with certain countries that you can do to mitigate it. At the same time, it depends on the value, because sometimes the cost of doing these structures outweighs the benefit. So again, it's very much an individual conversation. It's a hard question to answer, kind of for everyone. Everyone's different budgets, different amounts, different nationalities, different tax regimes. So yeah, there generally is a consideration there, but there is also generally a solution that can be put in place, but not always.
Thank you. I didn't really want to end the podcast on a tax question.
It's probably not the best thing to end on.
I mean, what can we talk about lastly? We've been chatting for 40 minutes now, so I do want to wrap it up.
I would say we've not mentioned about beneficiaries, which is obviously quite an important part of any, well, especially life insurance policy. Beneficiaries is obviously who you're going to leave the money to in the event of your death. Obviously, throughout your lifetime, this can change. You can have children during that time. You could possibly even change partners during that time. So the beneficiary wish is your wish. You can change that whenever you like, however many times you like, as long as you're 100% of mind, then you can change it and amend it as and when. I mean, for my own personal situation, my brother used to be my sole beneficiary, and then I got married, so now it's my wife. So things do change, and it is easy to update these things.
What's your brother's relationship like with your wife?
It's very good. I mean, when I first told my brother, did
he know he was your beneficiary?
He did, because when I told him, he told me to watch out for falling pianos when I walked out of buildings. So he definitely did know about it.
Okay.
But yeah, all good on that front.
All right. Excellent. James, thank you so much for popping into the Rove Hotel today and having this chat with me. Like I say, I think it's a very important issue. And
I would totally agree, and it's been my pleasure to come in. I hopefully there's some snippets in there that people find useful. I certainly think life and critical illness insurance is the most important thing. It's certainly the first thing I talk about with clients. Having the basic 3 to 6 months cash in the bank for emergencies, and then second to that, having life and critical illness insurance just to basically bulletproof anything that life throws at you.
Mm-hmm. Brilliant. And where can people find you?
Well, in Dubai normally. In terms of where I work, or in terms of contact number? Or?
Yeah, I mean, do you have a website? A Facebook page dedicated?
I personally don't. I'm very bad with technology.
So the best thing for me to do would be
have a LinkedIn page.
Okay, I'm going to put the URL to your LinkedIn page and to my LinkedIn page as well.
Yeah, that's fine.
And also your email address and my email address. If anyone would like any further advice on this, then we'd be happy to speak to them about that. Yeah. Yeah,
for sure. More than happy to sit down and try and help someone. Yeah, for sure.
Excellent. Okay. Well, thank you so much for coming into Rove Hotel today, and thank you everyone for listening and staying awake throughout the duration of this podcast. Thank you very much to Rove Hotel for their ongoing support with the podcast and allowing us to use this fantastic venue to host the podcast. Thank you.